Good morning, traders. It is time for the market forecast. Friday, July the 23rd. Happy Friday, everybody. Thanks for joining me and trusting me with your time. My name is John Hoagland. As always, we're going to look at these markets, trying to find accurate context, good risk management, and always remaining patience. Patience. It's Friday. Thank goodness. I know we're all probably ready for a nice weekend. We had some volatility. We had some scary parts of the week this week. Things seem to be resolving nicely, and we're going to take a look at those charts very shortly here. As always, looking into the economic numbers this morning, nothing very impactful. We have at 8:45 Central, we have the PMI composite flash, which is a preliminary number for a probably more solid number coming out in the future. Probably not all that impactful, but you never know if it comes out. It comes out of whack with the focus on inflation. There could be some fireworks on that. Remember, that's 8:45, 15 minutes after the equity opening. We also have 12 o'clock today, Central Time, the Baker Hughes rig count due out for you crude traders. Crude seems to be resolving rather nicely, centrally located in the range. And again, we'll take a look at that shortly. Yeah, the NASDAQ marks new all-time highs in the overnight session, fueled by social media earnings perhaps. The S&P and Dow near all-time highs, not quite getting there just yet. It is Friday. The vast majority of any earnings that are going to be impactful are probably already out. We had Honeywell, American Express beating expectations. Kimberly-Clark, a pretty good miss for Kimberly-Clark this time, and mixed information from Next Era Energy. Again, most of them already out and being digested by us traders. Crude prices have stabilized after a volatile week of changing fundamental information. Lots of infighting going on with OPEC and China talking about releasing some of their strategic reserve. Questions as to the amount of inventory we have. We were looking for a little bit of a boost in inventory by the EIA, or a little bit of a draw or a booster. It was very confusing as far as the fundamental information for crude traders this week. How about some coffee? Anybody want some coffee? Coffee futures at 7-year highs. Apparently, some frost in Brazil has threatened the crop, and Brazil is also the largest producer of coffee. So it looks like if we're not paying enough for coffee already, that next Costa Latte is going to cost even more. Make sure that you like, share, comment, question, feedback, and heckle at will. Subscribe to that YouTube channel. Hit that lucky like button. VIX down 4%, 1698 this morning. Dollar index up slightly at 92.88, and the 10-year yield at 1.3%. Exactly. I'm going to say good morning to everybody. As always, Algo Lover, first one, you win the prize. Algo with some suggestions or thoughts for the E-mini S&Ps this morning. Have a great weekend yourself, Algo. George Adams, so close to the prize. Good morning, Murph. Happy Friday. Brian, Jorg, I'm not quite sure how to say it. I think it's probably George. Frederico, good morning. Stacking bananas. Good to see you here this morning. Tim Kinsner, good to see you. Theo, always a pleasure. Harry Gordon, happy Friday. Yes. Vince, good to see you. Tone, Keith, Jerry is awake. Hopefully John is too. Murph, John always says that the market doesn't like to leave it when the all-time high is hitting the overnight trading. Yeah, we've seen over and over this year that when we're following the overnight highs, we usually take them out in the regular trading hour session. Maybe not that day. We'll take a look and see what we think about that in a couple of minutes. Ed Nilsson, good morning. James, Ryan, Laura, Joseph, Zorain, April, good day. My pleasure. Prophet Eon, good to see you. Rob T, Harry, Greg H saying, good morning, traders. May your trades be your best ever. Very nice thought. Tanya, good morning. When? Chef Magallanes. Stacking bananas, thanking Greg. Bill Phillips, good to see you. Drones over Texas, good morning. I might start drinking tea at this rate, right? How about it? Fortunately, I'm a tea drinker. Good morning. Yeah, I'm a home brewed kind of guy. I know everybody likes to go out and get their fancy coffee, but it's already so expensive. It's probably just going to be going up. Hey, JD, it's good to see you. I haven't seen you in a couple of days here. Main Point Big Ideas, Benjamin Vikman. Good morning, Main Point. Now pray for me. I need motivation. Well, we will. We'll all pray for each other. How does that sound? I've been telling everybody to pray for world peace. Pray for everybody. Absolutely. All right, so let's jump into the charts. I've got them solid and ready here. So let's take a look and see what we're seeing here in the crude oil. And here we go. Okay. Volume falls as we kind of come back into weekly kickoff range inside last week's range. Really, we just had a pretty decent scare to the downside and a nice push back to the upside. Yesterday, we added 35,000 in open interest. Okay, that's in a centrally located area like this. It's difficult to gauge what that means, but it's something to make note of. We're probably returning back into some short time frame control. We've got a lot of time spent here. Take a look at the 30-minute chart. So, here's weekly kickoff low. We took a stab down below it. We've reaccepted back inside weekly kickoff range as well as last week's range. This is last week's low, put in a pretty decent low for us yesterday. Adding 35,000 on the upside yesterday, you would think that would indicate that we had some new buying coming into this market. Very, very close to the bone all night. No overnight inventory, not opening with a gap, holding above value. That's something of interest, of course. We've got a naked point of control above. We've got yesterday's naked point of control down below. I'm really going to try and stay patient in this market. When you take a look at the daily chart, look at the range. The range overnight, just a very, very small range, no big opportunity, and until there's something that changes, I'm not going to be all that interested in what happens here. I'm going to probably be focusing on the overnight low, which is pretty close to value low from yesterday. If we can reaccept inside of value, that might bring us to a value specialist situation play that could bring us back down to the low of value from yesterday. It's not going to hurt the market state at all. If we hold here, our overnight high is relatively close to the regular trading hour session high from yesterday, as well as settlement. I'm going to try and stay patient here. I'm not all that convinced that there's anything big that's going to happen here in the crude oil today. That said, watch and see what happens. It'll probably be a great trading day. All right, to the E-mini S&Ps. Okay, back to the all-time highs. These markets consistently look at. They just are so resilient. Bad news knocks them for a loop, but it's not very long until traders and investors forget what happened, and they move on relatively quickly. Back to all-time highs. Mentioned the need for new business. We were talking about that yesterday. We're back up near all-time highs. If we've adjusted inventory to the downside, there's going to be enough enough bullets or enough interest or enough new business to push this market higher. We added 15,000 in open interest yesterday on an up day, indicating, yes, we do have buying power back in this market and enough to probably push us to all-time highs, which we are currently working on. The all-time highs, last week's high, of course, is going to be a focus for us today. Take a look at the 30-minute chart. Adding 15,000 yesterday, we cleaned up a whole bunch of weakness below the market. This just on Monday, we cleaned up all of this, and now we are back near all-time highs. We are going to be opening with a gap. We also have another late spike situation. Now, yesterday, the late spike situation played out differently in all three of the markets, and I'm talking about the NASDAQ, the S&P, and the Dow. The S&Ps opened in the late spike. They gave us an opportunity at a couple of points today to look for opportunities to buy weakness in this market, but ended up resolving higher. We have another late spike. This time, we're going to be opening outright above the late spike, which is what the NASDAQ did yesterday. We are going to be opening with a significant gap above the late spike from yesterday. And, that is the best scenario for continuation to the upside regarding the late spike situation. So, gap rules. There's a lot of longs in this market. If it doesn't happen early in the session, this market may offer us a better trade location to look for longs if that's part of our hypothesis. So far, what we're seeing is a late spike situation that we are opening outright above. That's the strongest upside signal that can be placed with this late spike situation. Doesn't mean that it's going to happen. That's the beauty of futures, is we never know what's going to happen. That's just a probability thing. So watch to see if we can get some pullback off of overnight inventory. There's a couple of visuals to look at. This naked point of control from the past here has not been rechecked in regular time frame, in regular trading hours. This could end up being a decent level, I should say, for an execution. Just a thought. Nothing's for sure in futures trading. It's just exciting to see these markets offering these opportunities. The late spike play is one of my faves. So here's the NASDAQ. We had a bull flag. We broke out above the bull flag 2-3 days ago. We've been one time framing higher on the daily ever since. And we've put in a new all-time high in the extended trading hour sessions. Volume has maintained for the last couple of days, only adding 900 in open interest to this upside move. Doesn't frighten me too much. But again, we're still looking for new business. We're still looking for it kind of here in the NASDAQ. The NASDAQ is presented stronger. Here's how we can see that. Here's the 30-minute chart. Hey, where'd you go? All right. No. Come back here. All right. So, speaking of the late spike, I'm going to make this really big so everybody can see it. This was the late spike day before yesterday in the NASDAQ. The market opened with a gap, leaving the opening range at the low of the regular trading hour session. No gap close early in the session. We're already looking for longs because we're opening above the late spike. The market drives higher, gives us one little push back, really kind of a deep pullback that would give us another opportunity to finish the day on the high. 14,928 is the settlement price. We finished the day on the high on a late spike. We continued that late spike after the 3 o'clock settlement price. And now we're just kind of holding up there. So we've got some longs up there. Here's our move above previous all-time high in the regular trading hour session. We've been consolidating up here. Is this consolidation going to be enough to even out the overnight inventory so that we can perhaps have a decent push to the upside? Watch the opening range, the first minute of trade. If the first minute of trade in the equities is the low of the session, go with it. Okay? That's all I can say. 15,000, big fat round number, overnight, all-time high. Market doesn't like to leave that. NASDAQ again presenting stronger. Gold. Okay, we've been really kind of in short time frame balance here. Yesterday, off of the weekly kickoff low yesterday, we added 15,000 contracts in open interest. We saw some buying coming in up against this support level. Last night we tested down to it and through it again. Another rejection of price at that level. The open interest added 15,000 again off that low. We don't know about today, but the got to remember, I mean, we are rolling from the August contract, probably next week at some point. We'll be rolling to the December, all the way to the December contract in gold. So it's a little bit going to start to get a little bit blurry as far as open interest, as far as usefulness in the auction process. A lot of it's going to become rollover. But I'm going to be focusing on the extremes today. We had a pretty decent bounce off the low. Let's take a look at the 30-minute chart here. So we had a pretty decent bounce off the low here. This is the extreme of the balance area that we've been in, 1791, weekly kickoff low. We had a look below it. We had a pretty decent jump away from it. We've been driving back into value ever since. There's always a probability that we could bring price back to higher value upon a reacceptance of value when we open outside of it. But this is a pretty decent move back to the upside off of a known support level that has been providing some support. We were holding overnight shorts for sure. Some of this push to the upside, I'm sure, is overnight. Weaker hands shorten the hole down here, bringing price back up into value. Main focus is that probably that overnight low, weekly kickoff low. We're also looking at, a potential value area special situation play. I'll look for opportunities up here as well. But it seems to me just the market moving back into value. Probably the move of the day is likely already passed. So try and stay patient in gold today. Take a look now into the euro and the 10-year. The euro is in an interesting spot. So downside structure is intact. We're putting in lower highs. We're putting in lower lows. We have been struggling to go lower now for 1, 2, 3, 4, day 5. Higher volume and open interest increase fails to extend lower. So we got higher volume yesterday. We could not extend the range lower. We added 2,000 in open interest on a down day, but we still are struggling to push this market lower. It needs new business. It needs help to continue the move to the downside. Are those sellers exhausted, or are we going to exhaust the buyers that have been found down in this area? Last week's low, extremely pivotal for us today. Take a look at the 30. Here we are. Big move up, big move down. Settlement, 1783 and a half, 1.1783 and a half ticks. No overnight inventory. Opens below value, but within range. Early focus for me is going to be on the overnight low, as it is relatively close to weekly kickoff. Overnight low is going to be important. Not seeing any really confluence to the upside, but if we reject below value and accept, that may be enough to bring us to points higher. But there's really no reason for me to be in any urgent need to get into anything in the euro today. I believe that there is opportunity here, but I don't know if it's going to happen today or if it's going to happen later on in the day. So my focus is really going to be on the extremes from overnight before I decide to do anything here in the euro. Now the 10-year, when we look at what's been happening for the last 3 days, we closed here, we opened and closed here, we opened here. Our weekly kickoff high here of 134.03 has really kind of become magnetic, and we see signs of rejection up there. We're seeing some possible continuation to the downside here. We had a drop in in volume yesterday. We lost 43,000 in open interest yesterday. I think a lot of the upside momentum has been knocked out of this market. But again, I'm cautious around this weekly kickoff because it does seem to have become slightly magnetic. Now, we have the market opening below 1403 today. Okay, this is important. If we are going to move away from this level, this is your best trade location. It seems as though we are headed back to the downside, but there are plenty of levels to focus on for potential targets or opportunities below. Last week's low, right here. I think that's last week's low. Let me double check. No, last week's high. My bad. Last week's high. All right, so last week's high might be something important. We've also got a naked point of control just below that. I'm not quite sure what to think of this market right now. The rates, of course, are running price, but technically, I believe that this market is set to move back lower for a period of time. And this is a pretty decent opportunity here, and right off the opening as well. So if we're not already in this, I'm going to probably be looking for opportunities to sell strength anywhere near weekly kickoff high here, and being very cautious. I've got written on here that this market was kind of off the radar because of how magnetic the weekly kickoff level has become, but the more I think about it, it seems as though it's pushed its limits to the upside for the time being, and probably needs a pullback. So, all right, here we go. Back to Friday. So, Fred, it's good to see you. It's okay that you're late. Opportunity is present, but I will finish my preparation before I try to take advantage of opportunity. Absolutely. I've missed massive moves because I feel so bearish trading what I see today, as you all recommend. Yes, trade what you see. The talking heads are telling us what they think the markets are going to do. We have an idea of what we think the markets are going to do, but the real answer is going to come from the markets. I firmly believe that the markets are attempting to tell us what they're doing in everything that they do. It's up to us to be able to recognize what the signals are telling us, and to be able to trust in ourselves enough to believe that we're capable of seeing those levels and then responding to them. This is a difficult thing to do for sure. Yes, biases can be dangerous. Owner 232. They want the market to go up. It will continue regardless of the cost. You may be right. The equities have been eating shorts for 40 years. Right, so the question for Hogue, which brother is known as the handsome one? Definitely Rick. Definitely my brother Rick. I wish he was here because he would definitely agree with that. All right, folks, let's take a deep breath. Stay humble, grateful, creative, and thoughtful in your trading today. Accept information that might be contrary to what you believe. Try and remain on the intuitive side and stay away from the impulsive side. Impulse is fear and emotionally based reaction. We all succumb to them. It's just part of being a human being. The intuition is knowledge and experience based, and that's all what we're doing here is building knowledge and experience, and then learning to distinguish the difference between the two is one of the lines that we all have to cross. So have a great weekend, trade well. Looking forward to a nice weekend. Be kind to yourself, be kind to others. Say a prayer for world peace. Get out there and profit today. Anybody who's still trading after noon is probably down money. So that's something we always used to say in the trading pit. It's okay to be down money. Just don't hurt yourself. Don't risk thy whole wad. There's always next week for more opportunities and for more trading. So trade well, everybody. Have a great weekend, and I'll see you Monday morning, 8 a.m. sharp for the market forecast. Trade well.